The battle has begun, and Clarity Act is in the crosshairs. Today we'll be breaking that down with Matthew Sigel coming in from VanEck. Before we get started, I do want to thank our sponsor, and that, of course, is Tangem. You guys can get into self-custody, and under the circumstances, right now would be a good time to start your self-custody journey, because this is going to be one of those things that you're going to wish you did if we start to see yields go away and DeFi become challenged. So the way you set it up is pretty simple. You go over to tangem.com, order a 3-card set, and those cards work in conjunction with your phone. Very easy to set up and super secure, probably one of the best tools out there when it comes to self-custody. So check it out, use our link down below. It does give you a little bit of discount. I want to go to a couple of clips and a couple of tweets before we get started with Matthew. This, of course, was a tweet we put out yesterday around my conversation with Zach Pandel coming over from Grayscale. And just remember, this was the statement of where we were seeing where the industry is setting up on it. And basically, Grayscale had been in a position where they were backing Coinbase's stance of saying, hey, this is a bad bill. We should not be passing a bad bill, is really what it boils down to. You also had this going out almost immediately after that video that we put out, which, by the way, the title was No Bill is Better Than a Bad Bill. And the interesting point that he's getting at is this right here. You might not love every part of the Clarity Act, but I can guarantee you, you'll hate the future Dem version even more. So I don't know if this is Trump 101 in terms of negotiation. Definitely not part of the art of the deal. It appears that this guy is, I don't want to say it, but I think he's probably either neutral or maybe pro-bank in this kind of situation where he's basically backing up, I think, what the industry is asking for, which is, of course, a fair deal. And we'll see if that actually comes through. Another thing I wanted to hit on, this was Brian Armstrong actually responding a little bit, because there's a lot happening in the open social sphere right now. And here's what he had to say. Take a look.
I asked them, okay, is there a path to fix this after it comes out of committee? And they basically told me behind closed doors, if this comes out of committee with a bipartisan vote, we can't really help you on the full Senate floor. And so I felt like I had to stand up and say something defending our customers' rights.
This is President Trump's bill, not Brian Armstrong's bill at the end of the day, and that the White House is going to pull out if you don't come back to the table. You push back on this. What's really happening?
Oh, yeah, I mean, this is not our bill. This is a core part of his crypto agenda. There's some people who were a little grumpy. I think they got caught off guard. It's kind of like that metaphor of, 3 blind people looking at an elephant and everyone's trying to figure out, there's probably somebody in the administration who had that point of view, but that's not the people we're speaking with. I don't think have taken that approach. They actually very much want to get this done. I read through the draft text. Our lawyers were looking at it, and I said, this is wrong. This would harm consumers in America. To me, it's un-American and it's unethical. You can't come in and write a bill that enshrines the incumbent, tries to ban their competition. I'm just not going to stand for that. I have zero tolerance, and I'm going to say it publicly. And it pissed some people off, but I think it's going to help us get to the right outcome on this bill. That's the kind of leadership that I want to exemplify in the world.
And it's one of those things, whether you trust Coinbase, you don't trust them, the point is they are standing up for some issues, I think, that really do protect retail. Mike Belshey came out, the right side of history is that where you will be, where interest will be on retail, on stablecoins. And of course, I think the point he's getting at here is aligned with what a lot of people are saying now. The problem is we haven't seen a lot of people backing Coinbase, at least openly. And I've got some few clips to kind of go into that as well. But I want to bring Matthew Sigel on, coming in from VanEck, to kind of break some of this stuff down. How are you, Matthew? How are things going?
Hey, Paul. Good to see you.
Yeah. So you see the battle going on right now, both in DC, and it's all for, I think, the purpose of moving crypto forward. When you look at the current state of where we are right now in the Clarity Act, would you consider this as a fair deal for the crypto industry?
I think I'm on Brian Armstrong's side here. I think that the current draft makes it too hard for Coinbase and its competitors to aspire to be the everything app. It's going to make it too hard for them to pass along that stablecoin yield to their clients. And your point about enshrining incumbents, I think, was very valid. Also, if you look at that section 505 of the bill, which makes it impossible for the blockchain to be the ledger of last resort when trading exchange listed securities. So I get it, the odds of the Clarity Act passing, we came into the year close to 80% on Polymarket. It's now 40%. But it's reasonable to push back on what looks to be an incumbent written bill that enshrines DTCC dominance and also bank dominance.
So obviously what we saw on Polymarket, do you feel like this is something that is, I think Brian still appears to have faith that this is going to go through with some concessions from both sides. Would you be on that kind of 60-40-40 passing of what Polymarket is saying, or do you feel a little bit more confident?
I think at any given point, the odds of a bill passing are less than 50 because, only, I think it's like 3% of proposed bills get passed into law. It's not as if the regulatory backdrop has been good for altcoins, right? Altcoins have been in a bear market for the last year. So I'm on the side of, no bill is better than a bad bill, and to use the legislative majority to force a better outcome. And if there's no bill, could we really do any worse than what's happened to alts here over the last year?
Yeah, well, I think we could do worse if this bill were to actually get through. That would be a pivotal point in maybe the future of American crypto in general. I want to play a clip. This, of course, is by Brad Garlinghouse at WEF talking about this. Take a look.
Do any of these tokens need to have some sort of an interest-bearing element?
I think no particular need to bear interest for a medium of exchange because they'll be instantly transmitted. Frankly, we don't care. As a bank, we don't care. We want our customers to get the best thing for them. They like us for it, and we'll keep on doing that.
They would love it if the U.S. stablecoins were banned from paying rewards, and we need to make sure that consumers benefit, and each country puts their interests first.
Governor, to that point, does the digital euro need to pay some sort of an interest?
No, the answer is no in our case.
Why? Rewards, dividends, interest, is it necessary on stablecoins?
Ripple doesn't have as much of a dog in that fight as others in the industry, and so there's others that have stronger opinions. It doesn't directly affect Ripple's business as much. I agree in some ways that, look, competition is good. Crypto companies should be held to standards that banks are, and banks should be held to standards that crypto companies are in order to compete. So I don't think that's a one-way street that somehow Team Crypto gets to have a certain pass in some way.
Well, I think the point there, I would argue, is this isn't Team Crypto. It's really everybody that would be able to come to the table. I think it's just the issue that banks don't want to change the business model in which they get paid interest and suck that up from their depositors. As opposed to what's happening in the crypto market. I think you saw that there. The banks were clearly against this. It shows the hand now even further up the chain, which is being at WEF. Are there any bankers that you know that actually are for the idea of innovating and competing on a level playing field?
Well, there have been 8 bank charters, special purpose bank charters that were granted in 2025, and most of those went to crypto companies who want to issue stable coins and pay interest on a daily basis. So there's just a huge innovator's dilemma here. It's obvious that any holder of a bond or savings account would prefer to get their interest streamed to them daily rather than letting JP Morgan Chase sit on that float for a month and then pay out a fraction of the underlying yield. So, obviously, consumers would prefer the interest-bearing stablecoin. Regulators are worried about bank deposit flight, and here we are.
Yeah. Do you think, though, obviously we've seen bank deposit flight for some time going into money markets that has been fairly active. Money market numbers are as high as they have ever been. So I still think that's an argument of, back to your point, is that it's innovation that is thwarting where this market is going. Hopefully, we'll see the banks actually step up and try to figure out some innovative models that would help them get to the table more competitively. Here is David Sachs. Of course, he's our crypto and AI czar. His position is interesting to listen to. I want to get your opinion. Take a look.
Crypto community pulled it. I imagine they were calling people like you during all of this.
The so-called yield issue of whether stable coins are going to be able to pay yield. Right. There's a difference of opinion between the crypto industry and the banking industry.
And where do you sit?
I'm in favor of reaching a solution and facilitating a compromise.
What's a potential compromise look like? Because it looks like the banks don't want it to allow it to happen, and it looks like the crypto guys are adamant that it happened.
I would urge some of the crypto folks to be a little bit, to see the bigger picture. I understand that yield is philosophically important to them, but so is getting an overall market structure bill. But I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. I bet you, over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
Okay, I got to ask you, Matthew, do you believe that?
I believe that a deal in this case between, say, Coinbase and the drafters of this legislation comes down to how many clicks does the consumer have to make to opt in to the Coinbase rewards program, right? Yeah. And so you become a Coinbase member, and if you read the relevant disclosures and click through the necessary clicks, then you're going to be able to earn a portion of the yield that Circle is earning and then passes it through to Coinbase. And Brian just doesn't want the friction on that to be so high that Coinbase can't actually gain any customers. So I think maybe this bifurcation of yield is not allowed, yield is allowed. That's too bright a line. Yield will be allowed. It's just a question of what types of disclosures and how many clicks the consumer has to make.
Well, okay, but my question is what Sachs was saying is that he believed that at some point, if this goes through, that banks would actually forfeit yield to consumers, that they would come around to the idea of paying yield on stablecoins. Do you believe they would?
I believe that if stablecoins grow from 300 billion to 2 trillion, and it looks like we're on that path, then there's going to be pricing pressure for the banks, and they're going to have to start paying their interest, call it twice monthly, or whether it's weekly, whether that's streaming via stablecoin or whether it's via the traditional deposit mechanism. I don't think it really matters. I think this is about returning consumer welfare to the holders of the debt, and that's the direction of travel.
Yeah, I just don't know where the competition would come from if it's not capable of being paid across all competition. That's the point that I think the whole issue is with Clarity, is that they're locking out the crypto industry from actually exercising one of its innovations, which is a problem, I think, going forward. One other problem, of course, is getting around tokenized securities. This one, I think, is closer to you guys as a big supporter of Solana. Here's Carlos Domingo talking about tokenized securities. Take a look.
It is probably not the right negotiation approach. It just felt like a really, really good progress compared to where we were. They're taking a risk that is impacting the whole industry. So it's going to be a bearer asset or permissionless, or it's going to be people are going to be able to trade it without licenses, etc. That's not going to happen. And what I saw in the Clarity Act, they were basically reinforcing that message.
So Carlos, head of Securitize, been on our show before. Securitize, a big competitor with X stocks, we'll just say that, which is a direct competitor. Obviously, that's being supported by Solana, now on Ethereum. But the point is that it does start to push down on what's going on in the idea of tokenized stocks. Do you agree with that, or would you say no, this should be wide open in the market?
Well, I mean, I think the main debate here is whether the blockchain can be the definitive ledger for securities. And as the bill was written, my understanding is that it entrenches the DTCC monopoly. It leaves settlement at T+1 for exchange traded securities. And that's a disadvantage for, open source blockchains. Now, that's not the case for OTC securities, and I think that's part of the reason why Figure is, stock continues to make all-time highs, is because the HELOCs that they are issuing on chain are OTC, and so they're able to still realize the full benefits of that without entrenching some existing incumbent like DTCC. So there's I think a lot of folks who are talking their book here and might not mind the current bill going through because they have those legacy regulations. I'd put Securitize in that bucket because they have the ATS and the transfer agent. So they might be a winner from the bill as currently written.
So as currently written, obviously this bans permissionless stock trading. So would you be for that, or are you in agreement that this should not be put in the bill?
I mean, we'd like to see that section rewritten and let the open source chains compete. We'll see how that shakes out.
Who benefits most from an anti-bank bill right now? Would it be the likes of an Aave or others out there that are already exercising this kind of tool and this kind of product? What do you think?
If that section is rewritten, then
if you get
I
an
would say
anti-bank bill,
well, on one side, it would be the stablecoin intermediaries like Coinbase, right, who want to go out and acquire customers and effectively still pay them that yield. So that's why I think you see Brian really leading the charge on the stablecoin side. For Circle, I think it matters less because they are able to pay yield to their institutional counterparties. It's just a question of how those counterparties then pass it along to the retail client. And then on the tokenized securities front, I think it's the open source blockchains like Solana and ETH that would benefit if the regulator and that legislation permits the blockchain to be the definitive ledger rather than simply mirroring DTCC's ledger.
Yeah. What about on the lending side? So would you say maybe that's where something like a Morpho and Aave?
Yeah, maybe. I mean, from my perspective, we've tilted towards equities over the last year, and we thought that the deregulation at the SEC, which started really with anti-enforcement, right? So really what they could do first and foremost was remove the enforcement mechanism, and that put a lot of these chains on maybe equal footing from a decentralization perspective, when actually the reality is not. So yeah, it's my view that the open source chains would be the biggest beneficiary from rewriting that section.
Okay, all right. When you look at the markets right now, Matthew, and you see what's happening in Clarity, you see the macro pressures that we continue to track here on the show, whether it's looking at inflation, the job conditions, what we're seeing on a global macro positioning in this market right now. Does macro even matter anymore, or do you think it's all really regulatory framed at this point?
I mean,
for the market,
if you look at Bitcoin's correlation with the NASDAQ is elevated versus its 5-year history. It's not as high as it was in the 2021-2022 inflation regime, but it's certainly elevated, and you can see the move when the Asia markets opened on Sunday night that BTC was the first thing to move on the fears of an escalating trade war because of the Greenland machinations. You also had a major sell-side strategist from Jefferies who removed Bitcoin from his model portfolio on quantum computing fears. And then I think there were some technical issues. BTC rallied hard into the 100-day moving average, and then we had an RSI close below 70 that turned some of the chartists negative, and we identified 89K as a possible test. So here we are today, kind of testing that level. So there's definitely a macro element to this, and then there's some Bitcoin specific. But just to get back to your last question, which I didn't answer very well about, we pivoted to equities because we thought that the coins were not really going to show differentiation based on their decentralization, and that has played out really well. Some of our equity strategies are up 50% while Bitcoin is down 5% over that period. And that's why I'm kind of like dodging your question on whether Aave is the winner or Morpho is the winner. Is that under the current regime, it's companies, not tokens, which are accruing value, and I would need to see something change in the markets before abandoning that view.
Yeah. Well, and I think the idea behind this is if we get a pro clarity, meaning it's pro crypto industry DeFi, it opens up Aave and others to actually a path to becoming companies, and maybe at some point become a polymarket level type company that, hey, yeah, we're going to go public.
Could be. I mean, Aave itself has. We think there's quite a bit of tension between the interests of the token holders and the owners of Aave, the private company's equity. And that tension, persists throughout the space, is kind of opaque incentives leading to outcomes that are not always in the token holder's best interest.
Man, have you been following what's going on with OpenAI?
Yes.
Well, that's kind of the same thing, isn't it?
Well, there's no token, right, that people are buying for OpenAI. It's a private company. There's the equity in that company. To the extent that OpenAI can make money, that should accrue to the holders of OpenAI equity. There's no token floating around that folks are speculating on.
Yeah, well, that I agree with, but I think the condition of a company that's kind of in that position, there's a lot of tech startups that are like that, on an ongoing basis. Speaking of another tech startup, we got to talk about what BMNR has done. You put out a tweet right here. BMNR wins the authorization for new share issuance. Not talking about them being a startup, but the company they partnered with is definitely a startup. And that, of course, is what Mr. Beast is doing around the idea of financial services. First of all, what do you think about BMNR currently? Do you feel like this is the right strategy for them?
We do, and we hold BMNR shares in the Node ETF that I managed, and we came out in favor of their plan to increase the number of authorized shares. No doubt it's a big increase. The proxy consultants were against it, but getting these retail shareholders to vote their shares is really like herding cats, and I can totally understand why Tom Lee wanted to get it done all at once. There have been Ethereum DATs like Bit Digital, which went through a similar exercise, failed to get a quorum and enough people to vote their shares, and ended up being in this limbo situation for several weeks, which really took the wind out of their sails in terms of like acquiring Ethereum, and that stock has been a big underperformer. So I think that BitMine has been on the front foot on authorizing a buyback. They're the only DAT to pay a dividend. Tom Lee grew up in the equity markets. He is telling the institutions this is going to be the most equity-friendly DAT around, and we think it's wise to give them the benefit of the doubt.
When you look at this strategy, because the first time that I saw it and our research team had kind of uncovered it, you put out a tweet also kind of isolating one thing, and that was the YouTube component. Here, YouTube announced U.S. creators are going to receive stablecoin payouts. Maybe there's a bridge here. And then you have Tom Lee partnering with Mr. Beast, the largest YouTube creator there is, really, the most commercial by far, now going into a financial product that has a conduit into the biggest distribution that I think is out there. I know of nothing else that would even compare to that. Do you think this eventually makes its way into where there might be some sort of integration into marketing financial services via these kind of avenues?
Yeah, I think you identified the potential synergy, which is YouTube paying out stablecoins to creators. And so there's kind of an upside option if Mr. Beast were to endorse that type of mechanism or endorse a particular chain like Ethereum in order to kind of pay in advance for whatever stable coins he's moving around. We did add Google to the Node ETF once that news came out that they're on the front foot in terms of stablecoin payments. They also are working on a payments blockchain, which is not widely released, but Google owns a significant portion of TeraWulf, which is a publicly traded Bitcoin miner who is providing much of their infrastructure. So I know that BitMine got a fair bit of hate on this investment. I think it's pretty small in the context of their overall balance sheet. And, I don't hate the idea of taking a couple of moonshot bets like Beast Holdings.
Yeah, it is a moonshot bet. I think the synergy behind it of what BitMine is trying to do, especially on the Ethereum front, and you kind of apply to what could be happening with Mr. Beast, which is a very forward-thinking organization. So if they get a little bit of a lift in their financial services, this could get interesting very quickly. Let's go into our lightning round with you, Matthew. And these are some slides that basically kind of ask you where you would stand on these questions. The first one is, should Clarity Bill be voted as is? I think you've already stood on this one saying no. Am I correct?
Yeah, that's a no from me. I hold out for a better deal.
Hold out for a better deal. You and I are on the same page there. Let's go into our next question, which is, if a pro-crypto Clarity Act fails to pass, should we fire David Sachs? I say we. I think Trump would be very upset if we don't get this passed, and Sachs would be on the chopping block.
Okay. I'm gonna add a leg to this parlay. I'll say that if Clarity Act doesn't pass and there's no progress on the strategic Bitcoin reserve, then yes, David Sachs should bow out after the midterms.
There you go. All right. Well, you and me both on that. We agree. He's going to have to go get back over to Craft Ventures making money. Crypto ETF, total AUM slows without Clarity. Do you think?
Okay, this is a counterfactual, so pretty unfair. But I'm going to say no, because I think that Bitcoin still represents, the vast majority of inflows, and lack of Clarity Act might actually give BTC more differentiation here.
Okay, I am going to agree with you for that very same reason. I would agree with that. I think Bitcoin ends up winning if that is the case. Will VanEck launch a fully open DeFi product in 2026? We're having fun with this one.
This is an easy one. So, we're regulated by the SEC, and the answer to that is no.
No. All right. I'm going to say Paul Atkins pulls an end around and lets you do it.
Nice.
All right. Let's go into Ethereum 2030 price target. This comes from you. So I'm going to ask you to pick high or low.
The base case, if I recall, was I don't want to say the exact number, but it's in the middle of those two ranges.
Okay.
I think we'll higher to closer to the high end than the low end.
All right, I'm going to put you kind of there. I'm going to stay right with you on that as well. More conservative. Last question is, Binance enters the United States in 2026. Do you think they will?
Yeah, they're already here through Binance US. Some data shows they're holding some market share there. So could they merge those two entities? Maybe once Clarity Act comes in, or if CZ's maybe provide some more information to the New York regulator.
There you go.
I think I lean towards yes on that too.
Yeah, I like it. Hey, it's been fun. I love to, first of all, thanks for doing the speed round with us. That's always fun. Great to see you. Great to see what VanEck is up to. You guys, of course, check out VanEck and all they're doing. Very active, of course, in the blockchain and also in some of the holdings that they are working on. So thanks for coming in today. We appreciate it, Matthew.
Thanks, Paul.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.